my name is Nicolette Mashile, also known as the Financial Bunny. Welcome to the Financial Bunny TV. We're talking all things property, and I'm really excited because I get to have this conversation with a young lady who's really just making strides within the property industry. Now, I do, however, have to remind you that anything that is said on this specific channel does not constitute as financial advice, but if you are looking for financial advice, please do speak to somebody who is certified and rated with the FSCA. And in this regard, I think that it may be important for you to speak to a property specialist. I am joined today by Tidi, so I'm so excited. Welcome.
Thank you, Nicolette. Thank you so much.
Tell us a little bit about who Tidi is.
Tidi is a young woman who works for Central Development. I'm one of the sales consultants there. Yeah, and it's such a great industry to be in. I'm so happy to be here and so happy to get you guys on.
I love that she's here to plug you guys. And I think the first question I would like to ask is, we hear a lot about people going into the stock market. We hear a lot about people doing commodities, buying livestock. Why is property still an important asset to invest in?
I mean, you can never go wrong with property. It's such a great investment for your future generations. Plus, it gives you cash back.
Yeah. And when you said gives you cash back, explain that a little bit to me.
So you can make money in the short term through what we call a cash flow, or you can make money in the long term, which is called capital growth. So if you resell your property, you'll get much more than you initially paid for it. Yes.
So essentially what you're saying is that you are putting money into an asset. So, and I always explain to people, and I say, when you buy a property, especially when you buy with a bond, one thing you must remember, it feels like it's forced saving, because remember, the bank gives you money to buy a property that you cannot afford right now. And your monthly repayments are essentially like you putting money into a savings account.
Right.
That's what makes property really special, right? And that's probably why you guys do it at Central Development. Now, for instance, one of your developments called Oxford Heights is really exciting for me because it feels like the ultimate starter investment property. Can you tell me a little bit about that investment?
So Oxford Heights is a fully tenanted 2-bedroom apartments. So if you're an investor, you don't even have to worry about going through the admin of finding a tenant, because we've got tenants for you already. So you are guaranteed to make an income from day one.
Oh, that's exciting, because I think that really gives a little bit, a lot of people, because I find that the people that are buying property, especially your 2-bedroom apartments, are not always in Gauteng. Some people are from Limpopo, people are from Mpumalanga, they may be working in the mines, and they understand how to include property as an asset in their generational wealth, are building, but they don't want to be here all the time. So it's great to know. Now, talk to me about, once the tenant is in place, is there a way to get you guys at Oxford Heights to assist me with the tenant?
Okay, so what happens is, if you're an investor staying at KwaZulu-Natal or Cape Town, wherever, you do have the option to partner up with our preferred partners, which is CSI, and they can then manage the property on your behalf.
I like that.
Yes.
Because let me tell you, the nightmare of managing tenants.
It's a lot of admin.
Especially if you don't know it, you know? And a lot of starter investors don't know that, you know, there's certain laws that you need to know. The fact that you can't just, when someone's not paying rent, you can't just switch off the electricity, you know, all of that is documented in the law. So it's great to know that you guys have a preferred partner that can step in that. Let's talk a little bit about strategy when you are buying property, because I think a lot of people, abantu bethu especially, abantu abamnyama, right? We do this thing where if the bank approves a loan, we're just so happy for the loan approval that we just go out and buy a property, and then after a couple of years, because you actually didn't have a proper strategy. How does one start building their investment strategy when it comes to property?
I think very simply, educate yourself. Find out what is the best location that will guarantee you a high rental demand. Go to a place where you know, okay, no, in this area, people will not struggle to come and rent with me, etc., etc. Also, I think buy from a developer. I mean, we've already done all the research for you, so you don't have to worry about now all the costs, and you know, because we want to make sure that we can also get a return from what we've made. Yes,
I like that. I like the first part of you saying understand your market, understand the type of person you are wanting to rent out to. Because if I'm buying an apartment, for instance, at Oxford Heights for investment purposes versus your other development, which is, let's say, for instance, Zambezi Manor, those are two different types of people that I'm essentially wanting to rent out to. And it's important for me as a person to understand that market, to understand why I would even be able to find a tenant. I like that quite a lot. And you are very correct in saying, Wutsi, people should buy from a developer, because I've now, having spent so much time with you guys, have found out that a person doesn't need to pay transfer fees.
No, not at all. Not at all.
How are you guys getting that correct?
We are VAT registered. We've already done all of that. So you're not taxed again.
Yes.
So the costs, and we are partnered with great conveyancers and bond originators, so you don't have to worry about all the extra costs. We've got it covered for you. Yes.
Let's talk about risks and rewards when it comes to investing in property, because I think that's also another one that a lot of people are not very aware of. Well, there may be a risk, right? We've seen plenty of times where, for instance, somebody buys a property in an estate, in a sectional title development, and then people don't take care of the estates.
Yes.
Or the levy or the sectional title scheme is run badly. And then all of a sudden now financials are in a disarray. How important is it for a person to do a little bit of that homework in terms of, is the sectional title scheme being run well? Can I see the financials? Is that something that you guys would advise? Yeah.
Okay, so you need to understand the ROI, which is essentially the return on investment. You need to understand how that is calculated and what goes towards a return on investment, for example. So know where what your expenses are, what your income is, so that you can essentially just work everything out nicely. Yes.
And I guess it goes back to the conversation of breaking even, because I think often people don't sit down and actually do the mathematics and say, if I'm paying this much on the bond, I'm paying this much in levies, this much in municipal rates, this much in my insurances, versus the income that I'm actually getting from the rental, when will I actually break even? Because I think that's the most important thing, right?
So you break even as soon as your expenses and what you're getting at the end of the month, as soon as those are equal. So what you're paying in and what you're getting back, as soon as that is equated, it's at zero, then you're breaking even.
I like that. I like, because that's actually a very simple math equation. And essentially, if you want to start making money now from your property portfolio, you now need to make sure that the income is now higher. And you're very correct in saying, Guti, it's about the return on investment. So how can I ensure that I'm getting the best return on investment? Is it me paying a bigger deposit so that I can bring down my bond payment? Is it making sure maintenance costs are low? How do I ensure that?
Absolutely, you're absolutely right. The bigger deposit that you pay into your loan, you are guaranteed that you're going to pay less in your monthly repayments, and the sooner you finish paying off your bond, and the sooner you get to make that money back as well. Yes,
definitely. Let's talk a little bit about rental income, because it's always touted as the Holy Mary, or the biggest thing about investing in property. Is that the only thing that should be motivating people to go into property as an investment?
Not necessarily. It's definitely important, but you need to look at the bigger picture, the short term and the long term. So like I mentioned earlier, short term is the cash flow, that's your rental income. In the bigger scheme of things, or in the long term, it's the capital growth. So when you sell your property again, it's the amount of money that you get more out of it. So today you may buy the property for 100 rand. In 5 years time, you sell it again, you'll get it back you'll sell it for 500 rand. You're making 400 rand in your pocket.
I like that. I think that's something many of us never really think about, because I think with a very painful history, especially not just even on the level that a lot of us engage with it. At some point, women in this country were not allowed to buy homes without the husband or the father's permission, right? So just from that, it shows you we're now at a point where property is an asset that almost all of us can access, number one. And then number two, you are speaking to something that is very true, because many of us don't think about the capital growth, because we never think about selling. Because once I secure a home, it's your family, it's a family's house, So I do think it's a good strategy that people must never forget, that on the one hand, it is the rental income, which is great. Let's not take away from that, which as you said, it's the short term. But on the other, it's really making sure that this asset that you are paying into every month is an asset that if you're going to sell at the end of the day, is still going to give you that capital growth that you're looking for. And I mean, it's also very important for us to remind everybody that if you are buying from a developer, you also get some great tax rebates, right? There's a section, I think it's 613 of some tax law that gives you, if you buy 5 houses that are new from a developer, you get huge tax breaks. So that's also quite an interesting one. Let's talk a little bit about tips for someone who's looking to kickstart their property investment. They've watched all the webinars, they've read all the books, they've watched all the centered around property information. They've come to all your sales offices, whether it's Zambezi Manor or whether it is Oxford Heights. They are ready to kickstart their property journey. What tips do you have for that person?
First things first, I think I may have mentioned this earlier, buy from a developer. I cannot tell you how
reputable developer, right?
Definitely. So do your research. Do your research. Get to know their history, etc.
Because you've seen some developers have been in the news for unscrupulous behavior.
Oh, okay. I will not mention this. I know what you're talking about. Yeah, so definitely do your research, because like I said earlier, the developers have already done their research. I mean, they're also trying to get something out of it. So they've done their best to ensure that they will develop something that they will be able to sell again in the end. And if they are renting, that they will get renters in their properties. So definitely do your research. Watch podcasts and webinars and YouTube videos such as this. And just get yourself in tune. Yeah.
And how important is to make sure that you've got control of your additional costs when you're buying. Because when you're buying typically from anybody, you're paying transfer fees, you're paying transfer duties, you're paying bond registration, you're paying maintenance costs. Some people even buy fixer-uppers without actually the right knowledge of how much it's going to cost you to. I think if I ever had to give a tip to anybody that's investing in property is be aware of the additional costs that come with buying property. And perhaps maybe you can give us a last tip in terms of, maybe you're not necessarily a property investor. Maybe you really are just looking for a home. What would be your number one tip for a person like that? Because we buy with emotion when we're looking for homes. Yes,
that is true. You'll have to connect with the place, find a place that resonates with you, and find a place that won't need as much maintenance, because there's nothing worse than having to worry about maintenance costs, etc., etc. So make sure that you do that home inspection, just to make sure that everything is intact. Tidi,
you've been absolutely fantastic.
Thank you so much.
We really appreciate your time, guys. As Tidi said, it's so important that you connect with the place that you are buying. Don't fall in love with it, but connect with it. I made the mistake of falling in love with my house, and it's a nightmare for me right now because there are certain things I missed. So that home inspection that you speak about, very, very important. Those maintenance costs, ask about what costs are going to come. You know, for instance, I always tell people they move into houses that have gardens, but they don't know whether it's a sectional title development or am I maintaining the garden, and then it becomes an additional cost that one didn't actually factor in. So it's important for you to make sure that you are well aware of the maintenance costs. Over and above that, buy a place that you actually connect with. Tidi, as I said again, thank you very much. We really do appreciate your time.
Thank you so much, Nicolette.
Guys, it's been another Financial Bunny video. Thank you very much for tuning in. I will see you guys on the next one, and remember to stay centered around property.